pleasure of introducing everyone without mispronouncing their names. So, Ashta Mantari is an associate director with Economic Insight, with not just a specialization in economic research, but also hands-on experience in many of the most recent CAT cases that have been litigated in the UK, right? Including the Meta case and including the GTR case, correct? Excellent. And to my right, Simon Castley, he's a managing partner with Shook, Hardy and Bacon in London, with vast experience and responsibility, I would say, for product liability and other regulatory advice, advising clients from all over the world, all across Europe. And then far, Richard Hornshaw, who's a managing partner, I'm sorry, not a managing partner, but rather a partner at Akin, Gump, and leads their London litigation team. Not only just a litigator, but also vastly experienced in all things related to litigation funding, and we've worked closely in the past before. So, and myself, Leeor Cohen, part of the Burford Capital team in London, and Burford, myself personally, have all been involved in various collective and class action all over Europe, and find it very interesting, but also enjoy to see the field grow. So I will take a second, I will maybe make an introduction, and then we can have somewhat of a discussion and hopefully some questions from the audience later. So what we see, and when we kind of had our pre-discussion before, is that when we see collective redress, when we see class actions or group actions, it's almost always that we see a financing element attached to them. And I think a lot of the claimants are perhaps used to an American style of no-win, no-fee regime, or they're expecting that the litigation will be essentially on a contingency fee basis. At the same time, in England, in the Netherlands, in Germany, all across Europe, a lot of times we find that practitioners, law firms, are either prohibited or culturally deterred from offering a contingency fee solution or a no-win, no-fee system or product offering. So what we see in most of those collective redress and class actions is a financing solution. So a third party, a litigation finance firm like Burford and like many of our colleagues and competitors who are here today will offer financing for the action. And this is almost, I wouldn't say 100% of the cases, but close to 100%. And with that in mind, why don't I open it up to the panel, and maybe we can talk about some observation we're seeing. Richard, if you don't mind starting?
Sure. No, happy to, Leeor. So I think you're absolutely right. I mean, there are a huge number of drivers of growth in the class action market, but it's really impossible to imagine that it could have experienced the kind of growth it has without the availability of external capital from your firm and others. And I think there are a number of fairly obvious reasons for that. One of them is just the scale and complexity of these types of cases. Everything from the book build process, which in an opt-in environment, I think typically takes much longer and costs much more than people necessarily had always anticipated. I think these are cases which, at this stage of the evolution of the collective redress market at this side of the Atlantic, at this stage they're often testing previously untested issues, and I think that creates both uncertainty for those who are involved, and also itself adds to the cost and time that these things take. So if you take, for example, Mr. Merrick's claim, I mean, because of the way the CAT operates in the UK, the amount of funding which he has needed to secure in order to satisfy the CAT that he is going to be in a position to prosecute that claim to conclusion is in excess of £45 million. And that's just a sum which is out of reach even for most large institutional investors, and obviously in the retail context, the thought about raising that kind of war chest from a whole bunch of disparate retail consumers is really hard to imagine. So, and I think as part of the, in cost-shifting jurisdictions like England, for example, obviously insulation from adverse cost risk is obviously also itself a critical part of the overall funding package, and it may be that is provided by the same funders who are providing own cost cover, or it may be that you go into the ATE market, but all of that is part of the kind of the litigation financing ecosphere, which I think is an absolutely critical part of the dynamic here. And as you rightly said, Leeor, in other jurisdictions there are different ways to finance that exposure without going to third-party funding, most obviously contingent fees. But as you say, this side of the Atlantic, those are much harder to achieve. They're either outlawed entirely or they're really quite restrictive, and it requires a law firm with a healthy risk appetite, even where they are permissible. So third-party funders, therefore, are absolutely crucial. And the only thing I would just add at the end is that I think what third-party funders bring as well is not just economic. So I think the funders bring non-financial benefits as well, and whether it's a question of necessity or not, the expertise that funders now have in terms of structuring claims, class management, navigating issues, negotiating settlements, and so on, is another really important value add that they will bring.
Take that as a compliment. So to speak. Absolutely. And Ashta, I'm not sure if your experiences were similar, or if you've seen it from the same side or from the other side, perhaps.
No, I think I couldn't agree more with Richard in that the observation that quite honestly, it's just hard to see how any of the class actions, my experiences, particularly in the UK, would have evolved in the way that they have without external funding. And I think the things that I would add to that from sort of, as you say, the lived experience of as being the expert on some of the cases is, I think, firstly, the experience as of an expert who, at the end, has a duty to the court. It's actually quite hard because some of the issues like contingent fees or no win, no fee are just absolutely non-options for us. So I think, actually, without the external funding that to develop and then bring the cases, it's just hard to see how that would work. And so to the extent that expert work continues to be an important part of these kinds of claims, and as we've heard from the previous panel as well, it's hard to see how that would not be the case. It's just almost the only option that I see going forward. I think actually the second thing my observation is that the need for external funding comes in quite early on as well. So it's not actually just when the cases are live and we're speaking to the claimants. But I think even the kind of cases that we're bringing in, and as Richard said, I think they're standalone, opt-out, and heavily sort of tech-focused in more recent times. We're having to tread new ground.
Absolutely.
That's no mean task, which means that a significant investment, time, and effort is required to ensure that there's some coherence and it's a good claim before you go to the CAT in the UK, but generally. And that obviously needs investment and therefore funding. And thirdly, I think I might argue that perhaps there's actually more need for external funding to come in even earlier in the process, where you're even sort of seeking out where there's something to look at here. So again, this is some of the experience that I've had is, when people trying to look into claims sort of come to you and ask, is there something that you're interested in looking at? Often you are very interested in the spirit of it, but I think you constantly get pulled in different directions about, whether you're going to do current work or invest in something that could turn into something in the future. And, as commercial firms, you always have to tread that balance. And therefore, I would argue, actually, there's more that could possibly be done in sort of identifying the right kind of cases. And I think there's scope for more there. And arguably, there'll be better cases because of that, because you're not sort of splitting hairs and making commercial decisions around it. So, yeah, I think broadly.
That's fascinating. We might go back to that point in a second, but I wanted to let Simon just chime in and kind of share his views.
So I think the necessity for funding is there. I think I want to make a distinction between what I would say is the heavyweight commercial disputes, such as we're seeing in the CAT, and perhaps more consumer disputes with a social type angle that the qualified entities are possibly more interested in. And in September 22 this year, the European Consumer Association did a report on alternative sources for funding, and it listed a number of things that I think bear in mind for the qualified entities to think about, and these would be the entry fees, someone paying a little amount of money to join in, some legal aid options, some before the event insurance options, crowdfunding, particularly if it's a cause that people happen to personally believe in. I think there's been some success in Holland with crowdfunding in ESG cases.
There's some successes in the US in various,
Right.
very kind of political and cases which have a lot of public audience.
Right, and then the next one was public funding schemes, such as exist in Canada and Hong Kong and Israel, whereby these would be funded eventually by success in one case, would then roll over into seeding the next cases. Or antitrust fines being put into these organizations. So there are a number of, I would say, public interest ways in which alternative funding may come forward. And I suspect those might be suitable for the more social angle types of collective actions as opposed to the commercial. There's avoiding the litigation in the first place, of course, going to mediation and so forth. And before funding came along, we obviously in the UK had law firms that were funding these matters themselves through conditional fees. And as we see the RAD evolve in Europe, maybe those regimes, such as has been mooted in Ireland, will soften in terms of lawyers being able to do that.
It's a very, I wanted to kind of touch on two questions or 2 points before we move to the next topic. One was the concept of litigation finance providers or capital providers as a gatekeeper. I mean, you've kind of alluded to that. I mean, is it I'm not sure if it's your view or just, anecdotal experience perhaps, but is the fact that there's a financial party involved in various stages of the process helpful? Do they provide perhaps, so to speak, a watchful eye to ensure that certain claims do get past the so to speak, test or judgment and others do not? I'm curious for your opinion, but also Richard and Simon, yours.
I think I think the point Richard made, I absolutely do agree. I think there is something to be said about the discipline that comes with sort of somebody looking at the case from a commercial perspective, in that there is obviously everybody's in it for the right reasons, in that that there is harm that's been done, there are damages, and so you want to compensate the people who have been harmed. But I think there is something to be said about the process that one goes through in getting litigation funding. Is like, is there a coherent theory of harm? Is there enough damages for this to be worthwhile? Is there something? What are the different defenses that might come to you, and all of that? I think this initial thinking that goes through in almost like a test to pass the funding threshold, I really do think that actually does advance the kind of cases that are finally therefore being made to the CAT. And actually maybe there is, and sort of it's seen in sort of the kind of cases that are being brought to the CAT now, and therefore the amount of them that are being certified. Some might say that might be because of the threshold being lower, but I actually argue that's because of experience also that we've developed.
Yeah, no, I mean, look, I would agree with that entirely. And I think just on the kind of the financial aspect of it as well, I mean, one of the sort of the interesting discussions that I have with funders is about their attitude to providing this, effectively this kind of seed funding money. And that's an area where there are real differences between what funders are prepared to do. I talk to some who effectively, as a matter of policy, won't fund those kind of activities, then they'll wait until the claim is clearly feasible before they'll start to underwrite it. Others who will provide some kind of contribution towards those costs as part of an overall funding package. And then most interestingly, I've seen funders coming into the market now to fill that, specifically to fill the seed funding gap. So they'll say, well, we'll just fund.
Almost in a VC style.
Yeah, correct. That's exactly what it is, Leeor. Yeah. So I think that's a particular area where people are getting a better sense of what the costs can be, and therefore what the benefits can be of really properly working up a claim at an early stage. Different funders are sort of finding their own course to steer.
Interesting. I mean, I'll say that in jest, but I'm sure many of the audience have dealt with trying to obtain financing for claims at some point or another, and even from the other side, I can confess that it's never easy and quick, and it always is a challenging process that involves, a fairly convoluted process, and so to speak. So it's interesting to see the perspective as to kind of people stepping into that initial gap. And Simon, just to follow up on something you said earlier, do you think, and I know there's another session about this environmental and social claims, but in the ESG space, do you think the solution or the funding proposition will be identical, or will be slightly different and more towards a more public or more, so to speak, communal style financing solution?
I think it's going to depend on whether you're E, S, or G. I think there's going to be some clear differences in the environmental space, perhaps the crowdfunding model and so forth. Under the governance space, where we're getting corporate wrangles about reporting and so forth, maybe that is better for the commercial funding. Just to follow on a couple of points that colleagues made here, is from the defense perspective, I think if you see a funder prepared to support the case, you understand that it's gone through a lot of procedures of very highly paid lawyers looking at it, and a lot of very careful people who are very good with money understanding the returns that they may make on it. And that's obviously a lot easier an exercise when there, for example, has been a public law ruling, and it's a kind of follow-on action. I think for some of the instances we're talking about where there may not have been that kind of intervention by a public law authority, is a different equation, different balance and so forth, and harder judgment for the funder to make.
Yeah, I mean, listen, I couldn't agree more, and this is in many ways kind of music to my ears. I mean, we are in the business of financing litigation. We've been doing it for a long time, and the fact that funders are inherent to the space of class actions and collective redress is obviously very important to us, and we continue to be very active. But it's very interesting, obviously, to hear the various perspectives. I wanted to maybe touch on another topic that we kind of brushed on earlier when we chatted. I mean, very broadly and very different than, let's say, the US, when there's a very established collective regime, kind of class action system. A lot of the actions that we see, and I'm assuming that the panelists see on this side of the Atlantics, require, so to speak, an active affirmation of claims by the claimant. So they involve the book build or an opt-in as opposed to an opt-out. And we see it in the CAT now, and not, I would actually argue, more so than not. I mean, I'm not sure what the statistics are exactly, but many times in the UK, in the competition appeal tribunals, claims are certified as an opt-in as opposed to an opt-out. In Holland, we see a lot of, so to speak, opt-in claims. Obviously, in Germany, when a pure collective doesn't exist. So with that in mind, I wanted to pose the question and kind of hear your views. I mean, when a claimant, and we can, so to speak, differentiate between different types of claimants, makes the decision as an institution or as an individual to join some sort of group action or class action or collective redress, or even to opt out, kind of what is the criteria, what goes through their mind. And I would make one last comment. We should probably view this through kind of a retail lens and maybe an institutional lens. So if you think about something like a Dieselgate claim, that's a retail claim. Most of us own a car. And if you think about something like maybe a securities litigation, which is usually done by big money on asset managers. That's more of an institutional claim, and there's obviously between those bookends a lot of space in between. But when we open it up for discussion, Richard?
Sure. I suspect that whoever the claimant class is, whether they fall in one of your bookends or somewhere in the middle, Leeor, I think that the starting point for most people when they are considering joining these claims is what cost risk are they taking, and how effectively are the arrangements going to insulate them from that risk. Most people are persuaded to join these types of claims on the basis that they are a no-fee, no-win, no-fee situation, and that there's no adverse cost risk in jurisdictions where that applies. And obviously, in terms of what that actually looks like, then that's looking at the terms of the funding agreements and the ATE policies that have been put in place. It's thinking in particular about termination provisions, obviously now anti-avoidance endorsements, which are now commonplace in the UK market on ATE insurance policies, those sorts of things. How are disbursements properly sort of captured within the funding net to make sure that those are also covered. Those sorts of things I think are things that claimants of any hue are going to be interested to get comfortable on. I think in terms of sort of some observations as to distinctions between retail claimants on the one hand and institutional claimants on the other, I think, in my experience, institutional claimants are typically more interested to understand the corporate governance arrangements in relation to claims. So fairly obviously, how will instructions be given? On what will authorise the law firm to take particular steps? What control, if any, will those institutional investors have? Will they sit on a steering committee? Those sorts of things. I think, particularly, you mentioned securities mis-selling, Leeor. I think in that context, one thing that comes up again and again is what is the likely level of required participation going to be for those institutional claimants after the claim's been issued? Are they going to have to give disclosure or discovery? Are they going to have to put their portfolio managers on the stand to explain how they make investment decisions? Those sorts of things, particularly where people are coming from a US background, where those sorts of issues have been managed a bit differently through the kind of fraud on the market theory and what have you. That was touched on in the last panel, but distribution of damages. Is that something that's going to be pre-baked in the funding and retainer arrangements at the start, even though at that stage you won't know what the court is going to do in that, or the tribunal is going to do in that respect? But are you going to pre-agree amongst your fellow claimants what you're going to have in terms of a distribution methodology? And often, to what extent should that precisely mirror a sharing of the costs between the same methodology that's used to determine the sharing of the costs? So those sorts of things, I think, are more particularly institutional investor concerns than on the retail side.
I think I've little to add here because happily I think we've been shielded from some of these concerns. But I think one of the things that has been interesting me recently is about, and it's particularly because in the UK, in front of the CAT, I think some of these distribution issues that Richard, you were talking about have been sort of delayed.
There hasn't been one.
Oh, there hasn't. Yeah, exactly. It hasn't been.
So
they've been raised.
We're literally walking uncharted territory.
Absolutely. And actually, interestingly, though, some of them have been raised by defendants in some cases. But again, the CAT has been quite clear.
Is a way to undermine the claim?
In some sense, as one of the reasons that, have you thought about this carefully? And again, Pinar mentioned it in thing about, when your class is quite widely defined, if there's some parts of it that possibly will be uninjured, we'll find in the end, then, that has been actually raised. But again, the CAT's been quite clear that, that's an issue for later. But I think again, the kind of cases that we're seeing, which are like sort of large class actions and large because of the sheer number of claimants, possibly. One of the things I imagine would be relevant for claimants at the time are, is it worthwhile to claim? Because they're possibly quite easy to fund at this particular time, because again, they're big, quantum, but when it comes to sort of getting distributed, what actually happens?
So this is, so to speak, the cost of the stamp question.
Exactly.
Is it going to cost me more money to mail the check than the check?
Then get it, yeah,
yes.
Exactly. And maybe it might be more depending on what the standard for.
I mean, if I may, and we didn't rehearse it, but my personal favorite, which there's no answer to, but I think in your area very much so, when you see competition claims against cartellists, where there's by definition more than one, and if you think about a potential settlement in so to speak, in stages, how does the distribution look like when one cartellist settles and the remaining cartellists do not, and how do you distribute that, and now that it works, and the can has been, so to speak, kicked down the road, nobody really has an answer to any of these questions. It's going to be fascinating.
Yeah, exactly. We'll see stuff happening.
Cross that bridge when we get there.
Yes, absolutely.
Simon?
Question of cost that has to be considered on the retail front when anyone enters this. Of course, as Richard said, people want to know that they're not going to have to pay anything to join in. But the cost comes in two ways, and cost can be also the effort they have to put in later on as a claimant. Are they going to have to substantiate some claim which has been made on their behalf, such as in a contract situation? Did they rely on the promise that the contractor made? So you're going to have to go back to the individual in some of these cases and say, well, how did this shake out for you? And can you establish that? So I think people need to be told up front, yeah, they're unlikely to have to pay financially for this, but there may be some responsibilities on them if they join this group later on in the case. Then, of course, they've got the choice of which law firm do I go with.
That's always very important.
Yeah, it's a big choice. And in a number of the cases we're seeing in the UK, there's a lot of competition between these firms. There's very nice websites. There's also claims websites which you can go on. They seem to register mysoandsoclaim.com or whatever. There's a plethora of these things, and they rush to occupy these websites. And those can be difficult to navigate. They can be, I think, tricky to see, am I looking at a law firm website, am I looking at a referral website?
From the consumer
perspective,
yes.
Absolutely. So a number of small print issues there. I think some of the big UK solicitor brands have done very well in their FAQs and so forth, making it absolutely plain what people are going to get. And then people are looking at comparison sites as well. So both Google and Trustpilot have got reviews now of the
claim aggregators.
Yes, of the claimant law firms and how they're doing. One of the things that's coming back on those is the information that claimants are being given, how much they're being updated and so forth. They're not always that happy reading for some of the firms on those. But I think the big change we're going to see, and we've already seen it with one of the UK money-saving sites, is a comparison chart put there of the different offerings of the claimant firms, how much you're going to pay, how many people they've got signed up, what are their reviews on FIFO and Trustpilot and so forth. So as we go into the QE phase in Europe, we're going to get all these organizations that are vying to bring these claims. I think we're going to get comparisons made 3-4 years down the road, and people providing a service to tell you which claim to go with.
That's very interesting. I mean, so to speak, the joke we make internally, which is tangential to your point, is the same respondent in many of these actions are the same technology firms that enable most of the book building. Right? I mean, most of the book building nowadays on a retail perspective is done through your smartphone. And the same platform that enable aggregator and law firm to sign up clients and take them on are the same platforms that are being sued by the same law firms for violating antitrust or whatever privacy or you name it. It all happens every day. Excellent. No, that's very interesting. And maybe I want to make sure we leave some time for questions, but I wanted to maybe bring one last question, kind of more macro trends that might be influencing the funding environment. I can maybe start by saying what we're seeing in the market. And again, I mean, this changes every day, but we do see rates go up by rates, I mean borrowing rates. And as we see borrowing rates go up, and as we see more activity in kind of distressed markets, distressed debt, we see within the funding universe a lot of the casual player, to use a colloquial term, that used to play and used to invest, hedge funds and other, so to speak, various financial players exiting the market, not because they don't like the risk, but mainly because they find other opportunities that are equally as attractive or even more attractive to invest in. And at the same time, I think financing providers, funders like us and others, will be a little bit tighter with their capital. They'll be more just more deliberate in the way they make investment, because capital all around is more expensive. I don't know if people have seen it or seen conversation. I'm just curious more than anything else. Richard?
So, look, I think it's an interesting point, I think, that which I'll come on to in a second, the macroeconomic point. I think, I mean, in one way, interestingly, I think actually it makes litigation funding appear cheaper, right?
Yes,
relative.
Because less players, absolutely.
Yeah. So that, in a sense, is a positive.
Yes.
But I think there are challenges. I think a lot of them relate to points that have come up already in our discussion and in the previous panel, by virtue of the fact that this is still a fairly early stage market. Yes. It's, as people have remarked, it's less early stage than it was when we were having the same discussion this time last year. Yes. But nonetheless, it's still pretty early stage. So there was reference to the way that the collective redress directive is being incorporated into law, and Christian made the point about the fact that the draft legislation in Germany still includes some challenges for funders in terms of the scope of that legislation. No one has yet name-checked the Voss report, but I'm sure that will come up over the next day or two. And obviously that came from a place which was highly critical of funders. And I think the jury is probably still out as to whether, and if so, how that becomes legislation. But nonetheless, it's a potential headwind, I think, for funders to be aware of. I think generally, people's sense in a number of jurisdictions is that the judiciary is broadly supportive of externally funded claims, but there have been some setbacks there as well. I mean, the Oracle and Salesforce claim here, now on appeal, the Lloyd and Google claim in the UK, ultimately not prevailing at the Supreme Court. So it's not all one-way traffic judicially either. I think, in a sense, the success that the funding market has had and the growth of that market has now brought its own challenges as well. And again, carriage disputes, those weren't even a thing a year ago, right? Because there just weren't enough funded claims to
No, there wasn't enough. There were just not enough. Weren't enough. I mean, I'm sorry. So sorry to interrupt you. But I mean, I think one of the greatest thing is how many more practitioners across the board are involved, and it's this cycle that helps us all, meaning more lawyers, more experts, more service providers, more funders. All of this is very helpful, but just an observation, and I'll let you continue, please.
No, but you're right. And I think this room, right, is a prime example of that. Yeah, this room is a physical manifestation of the kind of ecosphere that is now an infrastructure that's now
bigger than the room last year.
Yeah, exactly. So and I think that's a very positive driver for this kind of virtuous cycle, as you say. I think defendants are getting more sophisticated right now, and they're starting to understand what pressure points there may be amongst funded classes, and they some of the points we've already. None of them are state secrets, right? I mean, some of the points we've already talked about, the sensitivity some institutions or even retail claimants, as Simon was saying, may have about having to sort of put their name on a witness statement later in the process. Those are points that can be probed very early on. The uncertainty in relation to the quantum of the claim can be probed very early on. Carriage disputes can be probed to try and create kind of fragmentation or even stop things at an early stage, like the FX claims.
It's very expensive.
Exactly. So you know, defendants have become more sophisticated. So I think there are you know, challenges, but to my mind, and now to sort of come right back to where you started, I mean, to my mind, they're there, but there is enough will, and I think there is going to remain enough capital, notwithstanding the increase in interest rates. There is enough will to find a way through all of these, and people may have to slightly adjust their risk models to take account of how these things actually shake out, but none of them are going to be insurmountable roadblocks for a third-party funded class action regime, whether in Europe or the UK or elsewhere. And you know, somebody mentioned Ireland, and you know, I think they've announced that they are planning to introduce legislation to allow third-party funding, at least for onshore arbitration in Ireland. So you know, it's I mean, I have heard people talk about potential retrenchment from the market, given the changing macroeconomic conditions, and I'm sure there will be some people, probably the last people in will be the first people out. Yeah, but I think a number of people are, firstly, they are so pregnant with this as a business that it's going to take more than an increase in interest rates to make them bail out. And secondly, I don't think that is going to change things in a way which means that good claims can't find funding. I just don't see it.
Interesting.
Yeah, I think I broadly agree with everything you guys have said. And I think, I mean, the last couple of years, and particularly, I think, in my experience, 2022 has been something of a golden age for this kind of work. And there are, of course, several reasons for it, not least the experience that we've all built, the standards becoming clear, not only thanks to the Merrick's case, but actually several other cases where there's just general comfort with understanding what the standard actually is. And of course, there's just the plethora of action that's been happening on particularly on the technology firms, which allows kind of some of this thinking to start off a potential claim. I mean, no doubt some of the macroeconomic environment will have an impact. And I think the other thing that might have an impact is exactly what we were saying, that when some of these early actions actually do go to trial, I suppose we'll somewhat go back to the standards, won't we? Because even if the standards for certification might be as they are now, some of how stuff is decided will become cleared, and you go back in the process, sort of. So no doubt that will have an impact, both potentially in the number of cases, but also the nature of the cases that we're seeing. But
that in some way is good. I mean,
exactly.
I think about it from our perspective, clarity to the process
yes.
Of the regime is always good. I mean, we'll make a decision either here or there, but knowing how courts think about it is always extremely helpful. We know what we're dealing with. That's always an advantage.
Absolutely, and yeah, exactly. Because a lot of time you're kind of, as a quantum, there's a little bit of uncertainty. Class, there's a little bit of uncertainty, and I think just clarity around that will help. So I completely agree. I think we might, in theory, maybe see fewer cases, but that doesn't mean that any of the good cases that actually had a shorter trial would go away, because there's too much willpower going around it.
Simon?
Macro changes, I think the market of the purchasers of this funding lags behind it somewhat. So as solicitors, we've seen marketing blitzes over the last couple of years from the funders, whether that's actually authoring the legal guides, indexology, and so forth like that. Partnership with the Law Society, recently we read, with Century funding. I think some of the law firms are taking on, I would say, a funder to fund a basket of cases which may not yet be determined, and the law firm has some interest in that. So there's been a recent trend towards, I think, the funding industry explaining to the solicitors profession what we can do for you, and that has been reflected in a lot of articles in the Law Society Gazette and other places as well. Together with Legal 500 and Chambers starting to rate you guys as well.
Yes.
Relatively recently. So from 4 or 5 years ago, we've seen the funders move into the market. I still think the solicitors and the legal profession is working out exactly what can they do for me, on what terms, and so forth.
Absolutely.
That's going to mature.
Yeah, very helpful. Thank you. I mean, before we conclude, I saw the mark. Maybe if there are any questions, one or two from the audience, I'm not sure if we can. It is still early in the morning, but perhaps. I see none. Perfect. I mean, with that in mind, I'm going to thank my panelists. I'm going to thank the audience for letting us kind of talk in your ear for a little bit. Thank you all very much. And we can move on to the next one.
Thank you.